In this video, I'm going to demonstrate comparing traditional and activity-based product margins. So our company here is going to make two different kinds of hiking boots, and that's going to be Extreme and Pathfinder. And they have a variety of information for those two different units, including the selling price, direct materials, direct labor, and labor hours per unit. They're also giving us our estimated annual production and sales. Our starting point is preparing our product margins using our traditional costing system with one plant-wide predetermined overhead rate, irrespective of these different products or different activities within the business. And they've decided that that overhead rate is going to be applied based upon direct labor hours. If you recall from a prior chapter, to do a plant-wide predetermined overhead rate, you take the total estimated overhead costs, which they identify as $1,980,000, divided by the total estimated direct labor hours, which they've identified as $120,000, and we would get a plant-wide predetermined overhead rate under the traditional system of $16.50 per direct labor hour. So let's go ahead and work on calculating the product margin, and I'm going to do it only for Extreme, so you get an example of this so you can do Pathfinder on your own. Product margin is sales minus all costs. So let's go ahead and start with the sales. Again, we said they gave us that Extreme is $140 selling price per unit times 20,000 units would be total sales of $2,800,000. Direct materials, 20,000 units times $72 in direct materials per unit is direct materials of $1,440,000. Direct labor is given to us in a per unit, not per hour, so I'll note that. 20,000 units times $24 per unit is $480,000 in direct labor. We need to apply the manufacturing overhead based upon direct labor hours. Well, if we know that every single unit takes 2 hours, that's given, and there's 20,000 units, that would be 40,000 hours altogether. 2 direct labor hours times 20,000 units, then multiply it times our predetermined overhead rate of $16.50, and we will apply $660,000 of manufacturing overhead to Extreme. Adding up the direct materials of $1,440,000, direct labor of $480,000, and manufacturing overhead of $660,000, that gives us a total manufacturing cost of $2,580,000. Subtract that from the sales of $2,800,000, and that gives us an overall resulting product margin for Extreme of $220,000. That would be with our traditional system. Again, hopefully it shows you the process and you can calculate Pathfinder on your own. Now I'm going to shift gears to what if instead of a plant-wide predetermined overhead rate with our traditional system, we shift gears to an activity-based costing system. Well, for one, and they've done the heavy lifting for us, we need to figure out what activities are really happening within the business and what's driving them. So they've identified 4 activity pools as part of manufacturing overhead, supporting direct labor based on direct labor hours. They say estimated at 783,600, and they've given us the expected activity for that. Batch setups, 495,000 of that 1,980,000 related to it, and they've identified the number of setups related to that. Product sustaining, not organization sustaining, but sustaining the products, well, 602,400, and we've got 2 different products amongst those. And our other organization sustaining, if you recall from previous videos, we've identified 99,000 of that 1,980,000 related to it, but we're not going to try to allocate that since it's organization sustaining to our products. The first thing we need to do is get activity rates for each of these. So the estimated supporting direct labor costs of 783,600 divided by total direct labor hours estimated to be 120,000 is $6.53 per direct labor hour. Batch setups of 495,000, total estimated batch setups between the 2 different products of 300, would be $1,650 per setup. Product sustaining, a lot of that, $1,980,000. In fact, about a third of that, $602,400, divided by just 2 products, we're going to do this equally, is $301,200 per product. Again, we're not going to try to allocate that since it's organization sustaining. So again, let's work on extreme, but this time with activity-based costing. You'll note that I went ahead and listed sales at $2,800,000, direct materials at $1,440,000, and direct labor of $480,000. But I don't show the calculations for those. The reason why is they're prepared the exact same way as the traditional system. Whether you use ABC or traditional costing, it does not change the way you assign or calculate sales, direct materials, and direct labor. It doesn't change that, so I simply copied the information from the first part of the problem. However, we do have to calculate our overhead now. Supporting direct labor, $6.53 per direct labor hour, and the amount of those 120,000 direct labor hours related to extreme is 40,000. So 40,000 times 653 is 261,200 in supporting direct labor assigned. Batch setups, 1,650 per setup, and 200 of the 300 setups is related to extreme. So 200 times 1,650 is 330,000 of batch setup overhead costs assigned to extreme. Product sustaining, it's an equal split, 301,200 per product. There's only one product listed under extreme, so 301,200 product sustaining gets allocated to extreme. When we take that 301,000 of product sustaining, batch setup of 330,000, supporting direct labor of 261,200, direct labor of 480,000, and direct materials of 1,440,000, we get a total cost using ABC costing of 2,812,400. Subtract that from our sales of 2,800,000, and this time we have a higher cost than sales. So our product margin is actually a loss because, again, costs are higher than sales. It's a loss of $12,400. Now, just a friendly reminder, because I know it's been a few minutes since we went through the calculation. When we did traditional costing, it appeared like extreme was profitable. It had more sales than cost, 220,000. When we do ABC costing, keep in mind material and labor is still assigned the same way, but our overhead is going to be assigned much differently. We're at a loss with extreme, and ABC costing would be a more accurate way of assigning our overhead costs because we're really drilling into the activities that are happening and what's really driving us. But we're showing that extreme to this point is a loss. Again, I'll let you calculate Pathfinder on your own. I want to venture a little bit into the final part of the problem. I'm not going to go through everything in the interest of keeping this video as brief as possible, but just to show you how to start preparing it. The last part of it is once we know our cost information, they want us to do a comparison of the cost between the different product lines. For example, with our traditional system first, I simply just copied this information from the first part of the problem. Recall for extreme that we identified direct materials are 1,440,000. That was already worked out in the first part. Direct labor is 480,000 and manufacturing overhead was 660,000 for a total traditional cost assigned to extreme of 2,580,000. Not any new calculations, we're just going back to the first part of the problem. What they're wanting us to do, though, is do a comparison of costs between the different products. Now, since I haven't worked through all the Pathfinder information, that's part of why I'm not working through the rest of this. But just to show you, for example, if you work through Pathfinder for the materials, took the number of units, multiplied times the direct labor costs, or not direct labor, pardon me, direct material costs, you would have gotten total direct materials for Pathfinder of 4,240,000. Adding that to the material cost we already calculated for Extreme of $1,440,000, for the company overall, that would be direct material costs of $5,680,000 altogether. The percentages are just looking at the percentage of the total. Direct materials of $1,440,000 divided by total direct materials for the company's both products combined of $5,680,000 means 25.4% of the material cost for the company is assigned to Extreme. Pathfinder, again, just showed you the overall calculation here of $4,240,000 divided by $5,680,000 for the company means 74.6% of the material cost for the company is assigned to Pathfinder. Again, still need you to work through all the Pathfinder calculations, but I'm at least giving you the totals here as check figures. For example, if I work through the percentages of direct labor for Extreme and manufacturing overhead for Extreme, for example, $480,000 divided by $1,440,000, 33.3% or a third of the labor cost and also manufacturing overhead cost is assigned to Extreme relative to the company. You will note that the manufacturing overhead percentage and direct labor are the same, 33.3% or a third. That isn't a coincidence. If you remember, under the traditional costing system, we were assigning manufacturing overhead based upon direct labor hours, so they're going to have the same percentage overall. Hopefully that at least gives you a start of how to fill out our quantitative comparison.